Okay guys, good morning and welcome to group 2, and this is the auditing weightage for me 50 marks in the examination. Corporate company accounts and auditing, this is for 50, that is for 50, and in the group 2 syllabus is limited syllabus and comparatively group 1 syllabus, group 1 syllabus is like a ocean. Where we start and where we end all sometime we don't know. But whereas group 2 was not like that. Limited syllabus, and you can do it in a style. And auditing paper is most interesting paper if you have a curiosity to learn. If you don't have that curiosity, it bounces. Again, I am telling. No jokes will be there, no examples, nothing much won't be there. It's only a concept based. But very interesting subject. You should have that concern for the subject. That too, scoring paper. Like other papers point of, this will be widely helpful. Right? Let us start auditing, guys. Write few 1-2 lines, or not much. I confine to our material, and auditing material is the one of the best material we have. So I don't think beyond our material necessary. And questions also he asked only from material. That was experience, so that better that unnecessarily ruining the situation, we confine to our material, isn't it? Wherever necessary, I give the notes from outside. Right? What is the meaning of audit? Before that, audit is the word which is derived from the Latin word adire. Green. Audit is the word which is derived from the, can somebody on it? Yeah. Audit is a word which is derived from the Latin word adire. A-U-D-I-R-E. Adire. Adire means to hear. Adire means to hear. Auditor has to hear from the different section of the people in the company. Let us understand the importance of audit, what is the meaning of hearing and all, right? Look at this example here. Company. Company is an artificial person, judicial person, legal person, as we know. In case of a company, there is the diverse between ownership and management. Ownership lies in the hands of members of a company. Management lies in the hands of board of directors. The board of directors are keeping the books of accounts. End of the year, these accounts has to be accepted by shareholders at annual general meeting, as we know. Ordinary business and special business, we know. One of the item for ordinary business is acceptance of accounts and declaration of dividend. Who should accept it? Shareholders or members of a company. Books are maintained by management, board of director. What is the guarantee? These books of accounts are representing true and fair view. It may be manipulated, who knows? So that the shareholders are appointing auditor. Shareholders will appoint the auditor, ask him, look into this issue. So auditor has to examine the books of accounts, and wherever he got a query, doubt is there, he will ask the concerned official, get a clarification therefrom. That clarification he is hearing. That's why audit is the word which is derived from the Latin word adire. Adire means to hear. Is the hearing, clarification, explanation given by the concerned officials. Right? Let us see here one more. Our company head office at New Delhi. Branches are there entire country. In the 28 states, we have the 28 branches are there. Head office is sending the instructions or directions to the branches you follow these directions. Whether the guidelines, directions, instructions given by the head office is properly complied or not. How do I know? As a management, as a top level executive, myself is the board of director, sitting at a head office, giving a directions to the branch people, you do this. When I asked them, did you do this? They said yes. Whether they followed meticulously my instructions or not, how do I know? I have to send a person. That person is auditor. Again, he will go to the branch audit. My auditor will go to the each branch, or each branch wise one auditor is appointed. He will examine whether the directions and instructions given by the management, highest authority in this organization, is properly complied or not. The managers working there followed the memorandum, articles of association or not. Contentions within the entity. Then this person will go and examine the system and see to that whether there is any diversion, departures are there. Accounting standards has to be followed while keeping the books of accounts. Followed or not? Some are followed, some are not followed. Some are followed. Some accounting standards were observed. Some accounting standards were not observed. Then there is a risk factor. So that he has to prepare. These accounting standards were followed. These accounting standards were not followed. If the management get a data, then that information shareholders will ask at the meeting, why this accounting standard was not observed. Auditor will object. Members will ask. Director has to give a clarification for that. Thereby, auditor is observing things, whether things are happening according to the given situation or not. So guys, auditing is nothing but to hear from other people. He is hearing. To understand much better, I would say, I don't know how many of you could see the old movies, and Jamindar used to relax on the easy chair. One clerk was just standing with accounts books and he is keep on reading books, accounts. We spent for this one, this one, this one. He will listen and say, okay, he will ask a clarification in between. Finally, approved. Olden days. Because Jamindar won't write the accounts, accountant will prepare. That information the clerk will prepare rather. He will give clarity, he will explain, sir, this is the total receipt for us from so and so. These are the total expenses. This is the profit we have, loss we have. He will tell. He will ask the clarifications at the end. Close. That's what hearing. Audit is nothing but hear. Especially corporate world, audit is mandate. Again, friends, remember, any company which is registered under the Companies Act 2013 or under any previous company law, audit is mandatory. Every company, no exception. Audit report has to be filed. Even Section 8 company also, audit is must. Tax returns we have to file. What is the total income, total expenses? Here also, audit is mandatory. Now, what is the meaning of audit? Different definitions were there. One definition, must and should, we have to learn. That is, definition given by ICAI, Institute of the Chartered Accountants of India. This is the definition, but if I trust me, this definition, if you thoroughly understand, the entire audit is there here. Entire auditing is there in this definition. Today I am going to give an overview on the subject. Later, topic wise, again we will discuss in detail. Fine? Only overview on the subject now. See the concept of auditing, just check it. Auditing is a systematic, independent examination of data, statements, records, operations, performance, financial or otherwise of an enterprise for a stated purpose. In any auditing situation, auditor pursues and recognizes prepositions before him for examination, collects the evidence, evaluates the same, and on this basis formulates his judgment, which is communicated through his audit report. The whole audit is there here, my dear. It is a systematic and independent examination of data, statements, records, information, operations of entity, nothing but enterprise, for a stated purpose. In any auditing situation, auditor has to perceives and recognizes the prepositions before him and collects the evidence, evaluate the same, and form one judgment, which is communicated through audit report. Now from the definition, each word we try to understand. First one is, it is a systematic. What is the meaning of a systematic? Generally we say, hey, I am very systematic, you know. What does it mean? Generally we take this language. I am very systematic. She is very systematic. He is very systematic. We take this word. Systematic means time, punctuality. Next. Okay. Next. Hey, I am very systematic man. Systematic means orderly behavior. Means he knows what he is doing. Perfect planning. Right? I am very systematic means I know what I am doing. As an auditor also, I know what purpose I am appointed here. What I have to do. Then I know audit plan. Before, once you appointed me as an auditor, what I will do? I prepare audit plan, audit program, audit working paper. Then my assistants, I will do work in an orderly manner. Finally, I conclude it. Haphazard manner, I am not doing my audit. I come with a perfect prepositions. Right? Systematic means orderly behavior. In a haphazard manner, I won't work. I work in a orderly. First you appoint me as an auditor, means give me engagement letter. That is called audit engagement letter. It will take some time to accustom to the language. Auditor's engagement letter. Then I give my consent accepting the auditship. Then I know about entity. Who is the promoter? What business we are doing? When did you started? Who was our promoter or promoters? Who is at a top level executive, middle level executive, lower level executive, KMP, branches? So all the overview I should know as an auditor. Then I come to understand how to do audit of your entity. So just like that I am now doing my work. I have a minute details also with me. So internal controls of organization I know pretty well. Then I start my work. Then audit plan, audit program, audit working paper, audit assistants, and I will do in a orderly manner, systematically. My exams are there in the month of the June. Now it is January. I make a plan. When to complete my syllabus? 30th April. That is a tentative schedule. 1 month before examination, I have to complete my syllabus. Then before that, how I have to plan daily study. So systematic. I am working in an orderly manner, right? First one. Second one, independent examination. What is independent? Please remember, auditor's work is not influenced by, determined by any person. Auditor is having a freedom. What to do, what not to do as an auditor, let me decide. As a management, you don't give instructions, directions to the auditor. You do like this, you work like this, you give report like this. You have no right to direct me. Independent examination. For example, if I am working for organization as an employee, assume, right? I have to listen to my boss. Whatever my boss said, I have to do. Otherwise, no salary, no promotion, no increment. I may be fired also. Right? Whereas, if I am not an employee, that's why auditors are coming from outside. He is not an employee. If I want a promotion, I have to please my boss. If I want increment, I want to please my boss. Then whatever they said, I have to do. But whereas there is no independence for me, I'm a puppet in the hands of someone. Whereas auditor is having independent examination. Independent means, remember always one sentence, and auditor's work is not determined by anyone in the entity. He will do his work according to his plan. You appointed me as an auditor. You told me, cash book you need not verify. Cash book you need not verify. How is that? I have a freedom to check everything. How can you say that I can't see the cash book? Or you said cash book receipts I am taking care of, only payments you verify, receipts you need not see. Means, are you not interfering with my work? Do I have independence? Thereby remember, independence means auditor's work is not determined by any person in the entity. Auditor must have a unrestricted freedom to meet and collect information, evidence from anyone within the entity. You can't question them. You do like this only, work like this only. You can't give instructions for me. Let me choose, let me take my call as an auditor. Let me put this way otherwise. Auditors are appointed by, assume, example sake, auditors are appointed by board of directors. Auditors were appointed by board of directors. Right? Then this auditor has to oblige the directions given by the board. Your appointment, reappointment, remuneration, increase in the remuneration lies in the hands of board of directors only. Right? Then whatever you said, I have to do. Even the directors are guilty of the fraud, I can't report. Because my salary, you will define. My renewal, you will define. I don't have any freedom. But whereas auditor's appointment lies in the hands of audit committee under section 177 of the Companies Act. Audit committee is there. Committee will choose the auditor. Then who can be the auditor? Committee will decide, not management. And the committee, before they appoint a person as an auditor, what they look at auditor? Auditor's qualification, experience, and his professional expertise in doing audit of this entity. That's it. There is no personal bias. And once the person is appointed through audit committee, he is accountable to whom? Committee, not to board of directors. If the directors are guilty, definitely I can report. My work is not, because my appointment, reappointment, renewal lies in the hands of committee. So I will be accountable to committee. Committee is not one person, group of the people. I can't impress everyone there. I can impress the group only with my performance. This way, Companies Act, ICAI took precautions so how to give the independence for auditor. Because if my appointment lies in the hands of managing director, I should listen to MD. Whereas my appointment lies in the hands of the board of directors, I should listen to them. Because I don't have independence. Whereas my appointment lies in the hands of audit committee, yes, I have independence. Independence means my work is not determined by, restricted by anyone in the entity. I have unrestricted freedom to collect any information, any data from the organization. Am I clear? Systematic means pre-planned, predetermined. What he is doing, he knows pretty well. Independence means my work is not influenced. Hey, which course you will do? I do CMA. Independence. It's my decision. Someone is not imposed on you, you do only this. Generally, we can come across that parents sometimes may restrict that you should do only engineer or a doctor, MBBS. They will, after the child, they won't leave otherwise. That's not my cup of tea. Their choice, not my choice. I have no independence to choose. Some parents are there, better what do you want? This one, go ahead. You have independence. But once freedom was given, you should prove that you are the best in the respective field. You should not misuse that opportunity. Then again parents will interfere. I gave a chance for you, you haven't listened, nothing was happened, do now whatever I want. Isn't it? Thereby. Okay. Auditor will enjoy the independence. Fine. Next one is examination of the data, statements, records, operations and performance, financial or otherwise. Auditor is appointed. What he will do? Collect the data. What is the data? Books of accounts. Information, data, records, he will collect. What are the financial statements? Tell me. What are the financial statements? Trading, profit and loss account, balance sheet, cash flow statements and notes to accounts. Notes to accounts. Very rarely if there is any change in the equity. Change in the equity. Change in the equity means top level executives are there. Managing director, chairman of a company, directors of a company disposed their shares more than the 10%, the change in the equity has to be reflected. That's it. Financial statements, collect the data. He will collect this information from them. And see that financial or otherwise. What does it mean? Financial or otherwise. Trading concern, non-trading concern. Trading concern object is profit. Non-trading concern object is service motive. If it is the profit motive, books of accounts maintained is your trading account, P&L account, balance sheet, cash flow statement, etc., etc. Whereas in case of non-trading concerns, receipts and payments account, income and expenditure account and balance sheet. Thereby it has to verify which organization audit you are doing and accordingly collect the records. And enterprise means organization. It may be a company or a trust, cooperative society, whatever. Stated purpose. What is the purpose? Why this audit is going on? Annual audit. Once a year audit is compulsory. I am doing the audit, annual audit. Okay. Admission of a partner. Audit is compulsory. Retirement of a partner. Audit is compulsory. Sale of a company, audit is compulsory. Amalgamation of the two companies, sale is compulsory. Mergers and acquisitions are there where audit is compulsory. Once auditor is appointed, you should tell him what is the purpose of this and accordingly auditor will make his plan. For example, you want to go for a loan. Banker asked auditor's statement. If you tell the purpose, accordingly we will do the audit, give a report for you. Auditor must know what purpose he is appointed as an auditor. For example, we want to go for the tax audit, environmental audit, management audit. What exactly you want, you tell me, and accordingly I will do audit and submit a report for you. Annual audit is different, tax audit is different, environmental audit is different, forensic audit is different. What exactly you want, you tell me. And accordingly, he will plan and complete his work and submit a report to management. I hope you got this line. Right? Stated purpose. One should know the purpose. Then only things will happen, isn't it? And other one is, in any auditing situation, auditor pursues and recognizes positions before him for examination. Means already stated purpose means he knows very well what exactly has to do. Collect the evidence. For every document, evidence is necessary. What is the meaning of evidence? Prima facie, proof. For example, entries are made in the cash book. Receipt side entries are made, payment side entries are made. I think all of you know debit receipt, credit receipt. Two receipts are there. Debit voucher, credit voucher. Vouchers are available. Once the entry is made means voucher is there. No voucher, no entry. Must and shouldn't. Without evidence, you must not make an entry. So, each and every transaction you can verify the evidences. Collect the evidence. The evidence is usually letter part chapter is there for us. Let us understand in this nutshell. Evidence is two types. Internal evidence, external evidence. What is internal evidence? Evidence originated internally. Internally means within the company. Evidence generated internally and laying internal. Audit mean audit evidence is generated internally and laying internally. Example, timekeeping department, employees log in, log out. Records are there, managed internally, maintained internally and kept internally. Internal evidence only. Second one, salaries were paid. Salary statements are prepared, internally prepared, maintained internally. Right? So remember, so reimbursement of the traveling expenses. Voucher was prepared internally, one letter was taken and money was given. Unless otherwise, some procedure was not there. Right? So thereby remember, evidence generated internally, laying internal evidence. Second one, external evidence. Evidence originated externally but laying internally. Evidence generated externally but laying internally. Example, fixed deposits. Company made a fixed deposit. Deposit into bank. Evidence, fixed deposit receipt is there. Receipt is generated outside but laying inside. Goods supplied, invoice received from supplier. Evidence generated outside but laying inside. Remember friends, for any transaction, both internal and external, both the evidences are available. Auditor will rely on external evidence, not on internal. Internal can be tampered, manipulated. Whenever you want, you can create it. For any transaction, when both the evidences are available, internal evidence as well as external evidence, auditor will more rely on external evidence only. Okay, sir. No external evidence, internal evidence. Neither internal nor external. Then remember, management written representation or management written letters he has to take. Management has to give the letter, otherwise don't accept it. That's why one or other evidence is necessary. It may be internal evidence, it may be external evidence. If no evidence is there, management must give the statement, yes. Then that is going to be, otherwise tomorrow auditor has to face the risk. Risk is very high. Without verifying the voucher, how could you do this? Thereby guys, internal evidence, external evidence. Collect the evidence. Evidence was collected. When evidence was collected, give importance for, remember, audit evidence point of view always sufficient, appropriate audit evidence. Sufficient, appropriate audit evidence. This is the word frequently we come across. Sufficiency. Sufficiency means here quantity of evidences available. How many evidences available? Internal evidence, external evidence. Quantity, 2 evidences are available. I will explain this way otherwise. Purchase of the raw material. How many evidences are available, and if auditor really want? Check. Sanction from the top level management, permission should be. Second, placing the order by purchase manager. Third, received at gate and stores. At gate entries are made, one evidence, plus stores entry. Fourth, accounts people, final payment, one evidence. One transaction only, 4 evidences are available. Quantity, sufficiency. At all 4 places collect evidences. At all 4 places information is one and the same. Accept it. If there is a material difference, you should question. Sanctioned for 1000 units to buy. Placed order for 800 units. received only 500 units, payment was made for 1000 units. You can see the material differences. The auditor has to verify. That's why sufficiency means quantity of evidences at a particular place. Collect all evidences if you are suspicious. And the second one, appropriateness means pertaining to our entity or not. Personal business. Appropriate, verify. That's why sufficient appropriate audit evidence. This is a phrase very frequently we come across, right? So collect the evidence and evaluate the same. Evaluate means it is properly dated, properly signed, quantity and amount both are one and the same, pertaining to current era, last era, next era. Verify. Evaluate evidences available. You wrote examination, then examination each and every question the examiner has to evaluate, nothing but he has to correct it. Here also examine the evidence available, whether the evidence is appropriate or sufficient or not. Yes. So collect evidence and evaluate the same. On the basis of formulate his judgment. Evidences are available. What they stated in the books of accounts, what evidence is there, both are one and the same, accept it. When both are not one and the same, qualify means raise a question, ask the management, give a clarification on this. And based on that evidence is available, can you form a judgment or not? This is a fake information. Based on our professional judgment is there, based on experience also you will speak whether this is right information, wrong information or not. You formed one judgment, means one opinion is already formed. That judgment is communicated in the form of audit report. Report is only opinion, remember. Auditor's report is merely opinion. I felt. As an auditor, I felt, because I got evidences for me. Based on that evidences, I felt that this information is genuine. These books of accounts are representing the true and fair. And I am confident this information is correct. Otherwise, this evidence is false information, fake information. I was not satisfied. Then I will give the unqualified opinion, qualified opinion, disclaimers opinion, adverse opinion based on the transaction there. Here I am explaining one simple point. Later part again it will come. Auditor's report. Auditor's report is two types. One is a modified report. Modified report. Another one is unmodified report. Unmodified report. This modified report into three types. Qualified report. Second one is adverse report. Third one is disclaimer. Add qualified report, adverse report and disclaimers report. What is the meaning of, you remember now, acceptance chapter? Acceptance must be absolute, unconditional or unqualified. Unqualified, nothing but unmodified. Modified means subject to change. Unmodified means no change. The information I collected from the management is true and fair. Books of accounts are representing the true and fair. I got a correct data, correct information. And whenever I raise a question, I got a satisfactory explanation from the management. Nothing to object. I am giving a clean sheet. That's called unmodified. Nothing but a unqualified opinion. No conditions, nothing. I am perfectly satisfied. No objections at all. No doubt at all, right? Other one is modified, means subject to change. One is the qualified opinion. Qualified means conditional. Qualified means conditional. What does that mean? I got one voucher. According to voucher, 1000 ACs are purchased. Payment also made. When I go for physical verification, I found only 600 ACs. 400 ACs are untraceable. Then I raised a question as an auditor, asked the management, give a clarification for this 400 ACs. Because 1000 ACs were purchased, payment also made. When I go for physical verification, I could see only 600 ACs. Regarding 400 ACs, I want a clarification. I raised a question. Management also failed to give a proper explanation. Shall I give clean sheet? No. What I write? Voucher number so and so, dated so and so, purchased 1000 and physically only 600 ACs are there. Subject to clarification for 400 ACs, I am giving this report. Otherwise, 400 ACs, each AC 50,000 rupees, this amount is the fraud. I need a clarification. Unconditional means clean sheet. Conditional, qualified. I am raising a question. There is no satisfactory explanation. But how can I give clean sheet for you? There is a diversion of the funds, misappropriation. You are not giving clarifications on that. I won't give clean sheet. I raise the query. Then I make it a report. Shareholders will read auditor's report. When they come to meeting, they will ask a question. Can you give clarification on this 400 ACs? Then who is responsible? Management. Nothing but a detection of the fraud only, no? Qualified means conditional, subject to clarification, right? Other one is adverse opinion, negative opinion. Adverse means negative comment. Here qualified is possible, I would have given the qualified. Qualified is not possible, so that I am giving a negative opinion. Once a negative opinion is given, immediately special audit will be directed. Guilty of fraud. When fraud is there, usually adverse opinion will come. Other one, disclaimer. When the disclaimer will happen? Whose mobile is this? No one is claiming. Disclaim. You appointed me as an auditor. I have come for audit. I said, where are the books of accounts? You said, yesterday raid was conducted by Income Tax Department, Customs Department, Excise Department. Books were seized by them. No books. Then you said, no books, sir. Books were seized by IT people or excise people, customs people. Anyhow, you came now by all the way. Give one report as if you have done the audit, and I will pay the money. Your fees will be given to you. Will you give the report? Disclaim. No. Second one, I come for audit. Before that, yesterday's night there was a short circuit of a power or a fire accident. Books got destroyed. You said books were not there, destroyed. No problem. I will recover the letter. Sign and give one report, give one go. Will you give the report? Disclaim. I won't give a report. Otherwise, I have to face the music tomorrow. Thereby remember, disclaim examples are very simple. And books of accounts of a company was seized by Customs Department, Excise Department, Income Tax Department. And the second one is, in case books of accounts were destroyed by accident, fire accident, theft is there, whatever. I won't give any report. If you want, I will resign and go, but I won't give any report. If I give the report, I have to face the consequences under the ICAI. Disciplinary action will be taken against me. So, qualified means conditional. How many cars were purchased? How many bikes were purchased? Cars purchased. Total cars for a company, 50 vehicles were purchased. High-end to passenger vehicles, right? Location of the vehicle, they have to communicate where this vehicle, all vehicles need not be at head office, maybe the branch offices also. Location we have to communicate. That should be certified by the concerned official. How many vehicles were purchased? 50 vehicles. How much money was paid? Almost 50 crores. Location of the vehicle, I got information for 30. For 20 vehicles, there is no report. At least RC, registration certificate, one photo, nothing is available, no data. Can you give a report? What I say, voucher number so and so, purchased 50 vehicles, 30 vehicles were available physically, 20 vehicles are not available. Subject to clarification for the 20 vehicles, I am giving this report. Qualified. Adverse means negative, fraudulent activity. Disclaimer means audit was not done, I am not giving any report to you. Unqualified means clean sheet. What all information is available? Nothing but I collected the data, information, records, collected the evidences. All evidences were absolutely perfect. There is no suspicious transaction and everything is representing the true and fair. I am fully satisfied. Whenever a question was raised, a query was raised by me, management gave the clarifications. I was immensely satisfied. Nothing too suspicious. Then I give the clean sheet. That is called unqualified. So remember 4 types only. In our examination, pakka one question will come on this. So section in SA 700 is there. Last chapter this is. We will discuss in the due course of time. These are the 4 types of auditor's report. Report is mere opinion. Don't forget. Auditor's report is opinion. I have appointed you as an auditor. What will you do? You select the data. You collected the data and go for vouching. Vouching means take the voucher posting. Voucher posting we have to verify. Right? And how did you select the items of posting point of view? First item, 50th item, 100th item, 200 item, of course 150, 200. Every 50th item you have selected for a vouching purpose. I appointed you as an auditor. You selected 10th item, 1/10th item, 220 item. Your basis were different. Your basis were different. Same company, when 2 auditors are differently appointed, you do audit in your own way. They will do audit in their own way. You give one report, they may give another report. That's why remember, it is differ from person to person because basis were not same. Your basis were different. You said every 50th item select and they said every 100 item select. If they appointed me as an auditor, I would say every 20th item you select. Even sample size is increasing, risk also will increase. When sample size is reducing, risk also will minimize. When sample size increasing, number of the transactions that you are going to watch is reduced. For example, total how many transactions are there? 10,000 transactions. Every 50th item means how many transactions were watching? Just 200 transactions only. Other one said I will do 100. 100 means we are doing only 100 transactions. I am doing 20. 20 means I am doing the 5,000 transactions I am verifying. Then definitely my risk is very less. That's why your basis is different. Your basis were different. My basis was different. Same 3 of us does the audit of X company. I give one report, you give another report, you give another report. Because that is opinion. I felt, man, based on my assessment, this is what I found. And you would say this is what I found. That's why 2 auditors report need not be one and the same. I hope you are understanding this, right? Now see the definition again. It is a systematic and independent examination of the data, statements, records, information, performance, financial or otherwise of an enterprise for any stated purpose. In any auditing situation, auditor has to pursue and recognize the prepositions before him, collect the evidence, evaluate the same and form the judgment. that judgment is communicated in the form of auditor's report. Systematic means orderly behavior, means perfectly planned. Independent means my work is not determined by anyone in the entity. I have freedom to make my plan, program, whom to choose and how to do work. I only decide. And collect the data statements means I have to collect the vouchers, books of accounts from my client. The enterprise may be trading concern, non-trading concern. Trading concern means different set of the books I have to collect. Non-trading concern, different books I have to collect. And next one is stated purpose. You should tell clearly what is the purpose. You are going to the wedding anniversary. Your dress sense would be something different. You are going for the pub. Your dress sense would be different. You are going for the cradle ceremony. Dress sense would be different. See, according to situation, we wear the dress and go. Here also, auditor must know what is the purpose of this audit. I want to pay the tax audit. That's all. Admission of a partner. Then I wanted to know what is the revaluation of assets and liability until the date of admission. I think all of you remember partnership accounts. Until as on that day, revaluation profit will be given to the old partners in their old ratio. Readjustment of the capital at par with incoming partner. More money is there, withdraw. Less money is there, they have to brought in. Why should know? That information, available data should be genuine. For that sake, audit is compulsory. One partner said, I want to retire. Then we should tell, assess the records, give his share and let him go. I want to borrow loan from the bank. Whenever I go for the bank for a loan, bank manager asks only one thing. I want a projected profitability at least for 3 years. Projected profitability means based on existing data, forecast. Next 3 years, what could be the profit of your entity? That has to be certified by auditor. And accordingly, auditor will do the work and submit a report for it. That's what tell the purpose. Stated purpose means when I know purpose, I know the ways and means how to do it. When you come out from the house, you know where to go. Then it is easy to you to walk in. When you come out from the house, you don't know where to go, then you cross your fingers. What to do? You are looking here and there. Here also auditor is appointed, you are auditor. Thank you, sir. What to do? Don't know. Then what for you are appointed? Auditor, that's all. Go and sit. Not like that, no? There be purpose, stated purpose. Okay, no? Fine. In any auditing situation, auditor pursues and recognizes the prepositions before him. Collect the evidence. Evidence means prima facie. Down to 4 years or 3 years, you said, I am a qualified CMA. Evidence. Certificate given by them. That's only one proof. Here also transaction occurred. Occurrence of the transaction. Proof, voucher. Maybe debit voucher, credit voucher. Show the vouchers. Collect evidence. Evidences are 2 types. Internal evidence, external evidence. When both are available, rely on external. When external is not there, internal. When no evidence available, management written representation. Management letter. You have to take one or other evidence is necessary. Otherwise, qualify. Means conditional report you have to give. And evaluate the evidence. Nothing but a sufficient, appropriate audit evidence we have to verify. Based on that evidence, you will come to one conclusion. You form one judgment. Yes, in this organization, everything is perfect. In this organization, nothing is perfect. You can form one judgment there. And which is communicated through auditor's report. Auditor's report is a mere opinion. Certificate is different, report is different. We'll discuss later part. What is the difference between audit report, audit certificate? Certificate is facts and figures. Nobody can change. That's the final. That's the final. If I give the certificate, you give the certificate, she gives the certificate, same certificate we have to give. Example, salary statement. Bonus paid, gratuity paid, loans repaid, certificate. Anybody has to give same data. They can't change. That's why audit certificate is different, audit report is different. Auditor's report is mere opinion. I felt. Auditor's report is 4 types. Qualified opinion, unqualified opinion, adverse opinion, disclaimer's opinion. Right? Unqualified means clean sheet. Qualified means conditional. Adverse means negative. And finally, in case of a disclaimers means he refused to give the report because audit was not done. I won't give any report to client. Fine. Definition, you have to learn it. Fine. And this is only a, I don't see question in the examination and I don't expect at a BCom level probably important this is, but at a CMA level this is not so important. Since it is there, just we read one time. Tomorrow question comes, don't blame me because professional examination, expect the unexpected always will be there. What are the essential features of auditing? It involves evaluation, verification of reliance, reliability and adequacy of evidence in support to the verifiable information, vouchers, documents and explanation. That's what I said, sufficient appropriate audit evidence. Reliability, relevance, verification. What is the difference between vouching and verification? Vouching, voucher, posting, voucher, posting, voucher, posting. Vouching said transaction occurred. That's all. Occurrence. Verification means in existence. Verified? Yes. Land purchased, verified. I can go to the land, I can see physically. Furniture purchased, I can verify. Stock received, verify. Physical, I can see the stock. Building purchased, I can verify. AC purchased, I can verify. Verification means physical existence. That's why fixed assets are verified. Balance sheet items are verified, especially balance sheet item verified. Along with vouching. Right? Verification means only physical existence we are verifying. Best example, fixed assets, land, building, machinery, equipment, whatever. Fine. And other one is, it is a analytical, critical, investigative review of the system of accounting and internal control. What is analytical? Now itself I am giving the answer for you. Analytical means comparative study. Comparative analysis. Comparison between the two departments. For example, we want to go for analytical procedure. Analytical procedure, this word. Analytical procedure, what does it mean? Q1, Q2, Q3, Q4. Q1 performance 21-22 can be compared with 22-23. We are comparing here. Means current year information compared with the previous year. How many years I have to compare? If you want exact data, compare with at least 3 years, maximum 5 years. If I am able to compare the 5 years of financial statements, I can easily detect irregularity. No need to do audit, just comparison is enough. Paid up capital for the current year, previous year 1, 2, 3, 4. What is the current year paid up capital? 1 lakh crores. Last year 80,000 crores. Before 60,000 crores. Earlier 40,000 crores. Earlier 20,000 crores. If I compare like this, I would understand which year how much capital was mobilized. Paid up capital. Similarly, fixed assets. You can see current year fixed assets worth is almost 1 lakh crores. And the last year it was only 50,000 crores. How much difference? 50,000 crores invested current year. I can get a clue on that. Abnormal investment. Whenever you compare, you can understand either increase or decrease. Is there any abnormal fluctuation? Easy to detect, and auditor will focus on that. Analytical procedure really help the auditor speedy detection of the irregularity. Income from junk material means sale of the junk material, scrap item. Current year, how much money? Sale of the junk material. How much material, how much money we got current year? 1 crore. Last year, how much we got? It was only 40 lakhs. When you compare these two, you can see 60 lakhs increase. Then immediately auditor will question, is there any production increase proportionately? Because estimated wastage we know, actual wastage we know. Then how is that suddenly so much increased? Then what was the total quantum of the production made? Production made means material has to be, these are all interlinked. Auditor will go like this and verify. Did you started any new branches? No. Then how is that suddenly production increased? Then we get a clarity. No sir, earlier we used to work only one shift only. Now last year we worked for 3 shift or 2 shift. Then we got answer. Otherwise you are suspicious. How is that suddenly scrap will increase? Which means defective material purchased. Machine is not working effective. Immediately some questions will come for audit. Are you sensing, I think? And this is applicable for you and for me also, guys. 10th class examination, what is our percentage? 99%. Intermediate, 98%. BCom first year, 60%. Second year, first semester, 50%. Second semester, 40%. Third semester, 36%. When you compare this, can't you see analysis and at least a while here, 10th class I was 99% used to get, 98%. Here 60, how is that 40% drop almost? In the beginning itself you are able to realize the mistake, probably in the next your decline would have reduced, isn't it? Not noticed. He is going according to wind direction. Then one day definitely you will realize, what kind of person I was, what I am doing today. By the time 2 years completed, realized. Then started correcting himself in the first, for this second year. This is third year, first sem already over. Next sem aggressive work done. At least around 50% he will set in. Correction. That's why comparison is necessary. Always to comparable performance, and that's why it's very, very important is where we compare ourselves with yesterday. Is there any improvement for the day? Every day you need to have some kind of improvement. If we increase at least 1% every day also, after 100 days you can see the 360-degree change in our work culture. 100 days is not a big deal, isn't it? Every day little change. Every day change something, because overnight it won't happen. It should not be necessary also. Every day, some change. Then imagine after 100 days, you are a totally different person. And you can see your life in a style. It happens, but comparative. Analytical approach is this, comparative analysis. Internally, sometimes Coke company can compare their performance with Pepsi. HDFC Bank versus ICICI Bank. Both private sector banks compare. One private sector bank, one public sector bank compare. Then you will understand where do you stand. What are your lacunas, you know. Where are you strong, you know. Where you are weak, you know. Then you can take the corrective measures. It will be handy. Analytical approach. And other one is the critical analysis. Nothing but one particular point only will take, and macro to micro level you can examine that. And other one is investigative approach. Will come investigation later. Is there accounting and internal controls? What are internal controls? What are internal controls? Let me explain. Chapter is there, later part. Internal Control System, ICS. Please remember, this is nothing but a rules and regulations to be followed in order to accomplish objectives of the organization. Wherever you come across this word internal control system, remember this line. Rules and regulations to be followed in order to accomplish organizational objectives, do's and don'ts. Every organization is having one objective. So if you want to accomplish that objective, what is that you have to do? Do's and don'ts, everybody should know. Remember, in case of a partnership, we have the partnership agreement. Do's and don'ts internally. In case of a company, articles of association defines internal management of entity, do's and don'ts. So what is that intra-virus? What is that ultra-virus will be defined. Internal control system is nothing but a rules and regulations to be followed in order to accomplish organizational objectives. These rules and regulations may be relating to accounts and finance. Second one, management and administration. Third one, compliance. And fourth one, operations. The rules and regulations pertaining to these four areas. Accounts and finance. Accounts means what are the books to be maintained. Every company has to maintain the double entry system only. Books of accounts and double entry system, no single entry system. And what are the books to be maintained? Based on the trading concern, non-trading concern books. Finance. Are you going for the public issue is there, or private placement? Section 42. How did you arrange your money? Define. What are the ways and means? Deposits, debentures, share capital, through the public IPO, FPO, define. Those are rules and regulations we have to define there. Second one, management and administration. Administration at the top level, policy makers, their do's and don'ts. Management at a middle level, lower level, supervisory level, you need to have the certain rules and regulations to be done. Leave policy, define. Another one is operations. For operations, first I will tell. Operations means, mine is the trading concern. What are the operations? So, production, marketing, finance, HR activities. So, production department, do's and don'ts. Marketing department, do's and don'ts. HR department, do's and don'ts. Similarly, finance department, do's and don'ts define. Then compliance. What is the compliance? Mine is the company. As per the Companies Act 2013, certain rules I have to satisfy. Mine is the bank. As per the Banking Regulation Act, certain regulations I have to satisfy. Mine is the electricity company. According to Electricity Act, I have to satisfy certain regulations. Mine is the insurance company. As per the Insurance Act, certain regulations I have to satisfy. Compliance. Company registered under the company law. From the end of the financial year, within the 9 months, first annual general meeting has to be conducted. Compliance. Once AGM is completed, within the 60 days, annual report has to be filed with ROC. Compliance. Once Q1 completed, within the 15 days, branch manager has to submit a report to head office. Compliance. Q1, Q2, Q3, Q4 report has to be filed with ROC. Compliance. Board of Directors report has to be submitted with ROC. Director's responsibility statement has to be filed with ROC. 1000 or more shareholders are there, books of accounts has to maintain online, electronic data. Compliance procedure. What are the conditions that we have to satisfy? Whether those compliances were properly complied or not, who will certify? Auditor. right? So remember guys, internal control system is composed of these four ingredients. So what's the first one there? What's the meaning? The rules and regulations to be followed in order to accomplish organizational objective. Then again, the rules and regulations relating to what? Your accounting and finance, then management and administration, then operations, and the fourth one, compliance point of view. What are the conditions I have to satisfy? So this is about internal control system. Later part we learn this point again as a internal control system. Then you have a internal audit. Then you have internal check. Three layers are there. We'll discuss in the due course of time. Internal control system, internal audit, internal check. Three different segments. And you can't see a question paper without question from this chapter. Not exaggeration to say, pakka one question will come from this chapter. In the due course of time, we see this part. So internal control system, fine. Other one is information audited may be financial or non-financial. Trading concern, non-trading concern. And there should be a standards, criteria for evaluating the information systematically and scientific manner. And auditor should be competent and independent, qualified, possessing the prescribed qualification and COP, Certificate of Practice. So auditor, who can be the auditor of a company? Any person who is a member of the ICAI with COP. The auditor may be either individual or partnership firm or LLP, limited liability partnership. Auditor may be either natural person or a partnership firm or LLP, limited liability partnership. So auditor must be qualified. Qualified means you are a member of the ICAI and you possess the COP. Then you can do practicing. Fine. It ensures the reliability of information, authenticity of the assertions made. What is the meaning of assertion? Remember, declaration. Assertions means declarations. Trading account prepared. That said, this is the gross profit. Assertion only. P&L account prepared. They said net profit before the tax, after the tax. Assertion. Balance sheet is required. These are assets, these are the liabilities. Current assets, fixed, they declare some information. That's called assertion. Means the information disclosed in the financial statement is nothing but assertion. Okay. And made in the financial statements relating to enterprise, whether profit oriented or not, whether required by law or not, to enable the auditor to form the opinion on those statements with regard to true and fair view of the balance sheet, profit and loss account during the financial position disclosed therein. Nothing but the information given in the financial statement is a true and fair view. What is the concept of true and fair? We'll take up within the 5 minutes. Until now, verify. These points are clear. First one, sufficient appropriate audit evidence point of view. Second one, analytical means comparative analysis of the either internal or external. Other one is critical and investigative by nature, including internal control system. What are internal controls? Internal control is a rules and regulations to be followed in order to accomplish organizational objective. Internal controls pertaining to management and administration. Second one, accounts and finance. Fourth one, operations. And fourth one, compliance procedures. Fine. And other one is auditor. Information may be either financial or non-financial. Financial means a trading concern. Non-financial means Section 8 company, service motive. And they should be have some standard criteria. How you are going to verify your data means you should have certain standardized procedures prescribed by ICAI. You have to follow. And auditor should be competent, of course, qualified person according to law. And finally, the reliability of the information, authenticity of information. For example, and trust me, you have passed the CA, you got the COP, just hardly got 2-3 years of experience. Once you certify the books of accounts, everybody believe that data. Once auditor signed, banker won't be suspicious on the information provided by management. Loans were granted based on audited certificate. Tax was accepted based on audited certificate. So that was the power of an auditor. And once you sign, other people will accept this information as a blindly. So that before you sign the document, ensure that you are signing the after proper verification only. Otherwise, persons may be get deceived. Authenticity. One accountant having the 30 years of experience in accounts department, BCom passed, MCom passed, worked as a accountant for 30 years and rich experience. Signed books of accounts. Based on that information, will any bank or financial institution give a loan to you? Never. Never end. They say no. He is not competent. One person passed the CA, just 22, 25 years old man. Just 25 years, hardly got some experience. Signed records. Banker give a loan. See the signature. That signature and your membership number will got a weightage. They won't see your age and experience. One person having a 30 years of experience, highest integrity, but still bank won't give a loan. That's called reliability and authenticity. Reliable. Once auditor certified, relayed. Everybody relay. Income tax people will accept, customs people will accept, and banker will accept. Who is not going to accept your information once certified by auditor and thereby? And of course, and true and fair view. Now concept is true and fair view. What is the meaning of the true and fair view? Few lines you please write, then I will explain. Concept of true and fair. Concept of true and fair view. If you go through the previous question papers, this is the one question very frequently asked for short question. Very frequently asked question. Concept of the true and fair view. Write down one by one. First one. No asset is neither overvalued nor undervalued. No asset is neither overvalued nor undervalued. Second. There are no undisclosed assets in the books of accounts. There are no undisclosed assets in the books of accounts. Third, all material changes are recorded in the books of accounts. All material changes in the assets, all material changes in the accounts are properly recorded in the books of accounts. All material changes in the assets are properly recorded in the books of accounts. Fourth one. No liability is neither overvalued nor undervalued. No liability is neither overvalued nor undervalued. No liability is neither overvalued nor undervalued. Next. Balance sheet is prepared according to part 1. Balance sheet is prepared according to part 1 and P&L account is prepared according to part 2 of the schedule 1 of Companies Act 2013. Next. There is a consistency in accounting policies and principles. There is a consistency in accounting policies and principles. And last one. All unusual, exceptional, non-recurring items were shown separately. All unusual, exceptional, non-recurring items were shown separately. All unusual, exceptional, non-recurring items were shown separately. Now check once. These lines try to buttify and you should know it. First 3 items pertaining to assets. Next item, 4th item pertaining to liability. Next item pertaining to formats. That is called financial statements, how it has to be prepared. Fine. And next one is pertaining to your unusual, exceptional item accounting point of view. One technique you develop how to remember these clues and fine. Okay, see the first one there. No asset is neither overvalued nor undervalued. What does it mean? More depreciation provided, undervalued. Less depreciation provided, and overvalued. That's why the rate prescribed in the Companies Act or Income Tax Act, whether followed or not, verified. I want to show the more profit. I want to show the less profit. I can go change the depreciation rates. And that's why no asset is neither overvalued nor undervalued. Second one, all material changes in the books of accounts were properly recorded. What are the material changes? Existing assets were sold out. Should be deleted from the fixed assets register. Some new assets were acquired. It has to be made an entry into books of accounts. All material changes were properly followed. Third, there are no unrecorded assets in the books of accounts. Remember your non-trading accounts. I don't know did you do it or not. When I was a student, we have done the problems on that. Non-trading accounts, they will give the receipts account or income and expenditure account, whatever. In adjustments, they will write one point. Typewriter was purchased on so and so date, which was not entered in the books of accounts. Machine was purchased, typewriter, but not entered into books of accounts, which means asset purchased but not entered, unrecorded asset, which means now you make an entry. From the date of purchase to until 31st March, provide the depreciation, show in the balance sheet. Isn't it? That's the unrecorded. Ensure that there is no unrecorded assets in the books of accounts. Means all information was properly recorded in the books. So 3 points pertaining to assets. First one, no asset is neither overvalued nor undervalued. All material changes in the books of accounts were properly recorded, any sale or purchase. Third one, there are no unrecorded assets in the books of accounts. Third. Fourth one, no liability is neither overvalued nor undervalued, like assets. Fourth one, balance sheet is prepared according to part 1 of the schedule 1. P&L account is prepared according to part 2 of the schedule 1 of the Companies Act. Format point of view. You have to follow the proper financial formats. In that format only books of accounts has to be prepared, and a grouping of items are there. Whether those formats were properly followed or not, I have to certify. Other one, books of accounts are maintained through accounting policies only. What is accounting policy? Depreciation. Current year depreciation, we followed the straight line method. Next year, diminishing method. Next year, weighted average method. Again next year, diminishing method. Again straight line method. Whenever you want, you are changing persistently. If I change the depreciation policy, organization profits may either increase or decrease. Every chance. That's why there should be some consistency in accounting policies. Sir, can't I change the depreciation policy? You can. You can. But there is a procedure to follow. When accounting policy can be changed? First one, ICAI gave the directions to change accounting policy. Now onwards, every company should follow this one. When ICAI said, we have to follow. No other go. Next one, change of law. Law got amended, basic law. According to law, changes were made and I have to change. And third one, if I change depreciation policy, the books of accounts can be presented in a better way. Change. Only three options. Otherwise you can't change. One, ICAI directed, change. Second, law got amended, change. And finally, if I change the depreciation policy, the books of accounts are representing in a better way. Remember that word. In other way, it is going to be the best information. Then you can change. The change is retrospective or prospective? That's a question. Prospective. But only one exception. Because of the change in the depreciation policy, the profits are abnormally increasing or abnormally decreasing. Abnormal fluctuation is there. Then go with the retrospective. Otherwise, no. This question is important at the time of interview. In examination, I don't expect. In interview, people will ask this question. Please remember, ICAI, change of law. Otherwise, accounts can be presented in a better way. Change the depreciation policy. Otherwise, no. You need not change the depreciation policy. There should be some consistency in accounting policy. And last one, all unusual, exceptional, non-recurring items shall be shown separately. What are unusual, exceptional items? Winning from lottery. Every day it won't happen. It is not a operating income. You can't write on the credit side of the P&L account directly adding to the sales income. No. So it is separately. Winning from horse races. Rarely happen. Sometimes winning sale of the stock, abnormal fluctuation. It won't happen every day. That's why unusual, exceptional, non-recurring means it won't happen continuous basis. Then show it separately. Let users of accounting data know this performance is not forever. This is only current year. It won't happen in the next year. Because I want to take investment decision, I must know what was the total source of income. So it is separately. So that all unusual, exceptional, non-recurring items should be shown separately. So wherever you come across the word Navan words true and fair, your entire auditing almost, if I teach for 40 days or 30 days, all 30 days this word will use one or other way. So whenever the true and fair is there, these 6 or 5 lines should come into our mind. Assets point of view. No asset is neither overvalued nor undervalued. All material changes in the assets were properly recorded. And there is no unrecorded asset in the books of accounts. No liability is neither overvalued nor undervalued. And balance sheet was prepared according to part 1 of the schedule 1 and P&L account according to part 2 of the schedule 1 of the Companies Act format point of view. and there is a consistency in accounting policies and procedure. And finally, all unusual, exceptional, non-recurring items were shown separately. True and fair, you buttify these lines. Okay, the remaining we'll see tomorrow, guys. Thank you.